Good morning from ORTEX. Today is Friday, September 2nd, and these are your data highlights. Shares of Getty Images plunged by 29% on low volume yesterday, as buying pressure from the recent short squeeze dissipates and demand from retail investors dries up. The interest in Getty is part of a growing trend of traders that seek out SPACs that have recently closed their mergers, or de-SPAC transactions, and also had very high redemption rates, leading to a very low free float. Combining that with high short interest can yield a recipe for massive squeezes. But once the squeeze is over, the lack of interest from long-term fundamental investors can contribute to wild sell-offs and extreme volatility. Following a manual review with our free float provider S&P Global, ORTEX has recently confirmed that Getty's free float is just 508,000. Short interest remains extremely high at 440.9 thousand shares, or 86.7% of free float. British chip designer ARM has sued Qualcomm in what will likely be a protracted legal dispute with one of the company's largest, most prominent and deep-pocketed customers. At issue is Qualcomm's acquisition of Nuvia from early 2021. While both Qualcomm and Nuvia are ARM licensees, ARM is attempting to block Nuvia from transferring any of its intellectual property to its new parent company. ARM alleges that doing so would breach Nuvia's license agreement. Qualcomm has been under intense competitive pressure from Apple in recent years, as Apple continues to leapfrog traditional chip makers with its custom A series of processors. The news comes as Japanese tech giant SoftBank, which owns ARM, has reportedly halted its plan to divest the company. SoftBank had previously tried to sell ARM to Nvidia before that deal fell through due to regulatory pushback. Analysts are still bullish on Qualcomm overall, with 20 buys, 12 holds and 0 sells. The current consensus target price of $185.41 represents 43% potential upside. Make sure to subscribe and come back every weekday for interesting data highlights from ORTEX.